Hi, I'm Ewan Fletcher.
And I'm Glenn Sharp, and welcome to the Sharp Accounting News. This month we'll be focusing on the federal budget and tax planning tips. In the federal budget, one of the announcements that came out that has got a lot of press is the cost of living adjustment with a low income tax offset of $420. It's important to note that this will be part of your tax return and it won't be a handout that'll hit your bank account. So keep your eyes out on your when we prepare your end of year tax returns for the low income tax offset that is designed to help those earning up to $125,000 with cost of living pressures.
The recent budget also confirmed that the rapid antigen tests that we've all been paying for, when they're utilised for a work-related purpose, they will be fully tax deductible and you'll be able to claim these back in your end of year tax return. So keep receipts. Keep a bit of a listing of when you took the test and the purpose of it, and if it's work related, it'll be tax deductible.
In the federal budget, there was a couple of announcements that should be a positive for most of our small business clients. There's a skills and training boost which allows for an additional 20% tax deduction for any training or additional skills training that you've spent during the financial year. It's important to note though that this will only be for the 2023 financial year, not for 2022. There's also a technology investment boost, and the same thing, it will only apply in the 2023 year, so any expenditure before 30 June carries over to next year for the additional boost. However, we think this is a good thing for a lot of business clients. For technology that is spent up to $100,000 per year, can apply for an additional 20% tax deduction.
The government has also announced that there will be a small business support package that will be rolled out as part of the budget measures. Now, this doesn't come out as direct funding or anything like that. However, what it does is a number of these measures fund support services that will help business owners. Some of them are funding, for example, Beyond Blue from a mental health perspective. There's other ones funding services that help small business operators run their business. So keep an eye out for things there. As I say, it won't be direct funding, but it will certainly help business operators out.
Another budget announcement was around COVID-19 business grants that have been received during the past 12 months. Basically, prior to this announcement, those government grants were considered taxable income. Under the budget announcement, a whole range of industry support payments have been now classified as non-taxable and exempt income. So it's just a real bonus for those businesses affected.
If you're drawing a superannuation pension or considering starting one, the budget confirmed that the changes made during the COVID pandemic will stay in place. What these changes was that you only need to withdraw half of the minimum amount as required by legislation. Now, this is recognising the fact that your investments in the past may not have gone as well during COVID, so that's been extended up until the 30th of June 2023.
The budget also announced an expansion of the application of employee share schemes to small businesses and medium-sized businesses. Basically, the threshold for tax-free payments of employee share schemes has been lifted from $1,000 to $30,000. So basically making it more affordable for startup companies or companies growing to be able to offer employee shares as an incentive to their employees to keep them tied to the business.
Also announced was a cost of living payment of $250. This will be paid to recipients of Centrelink benefits during the month of April 2022.
It's also that time of year where tax planning is front of mind for a lot of our business clients. Important to note out of the budget that the instant asset write-off was extended right through till 30th of June 2023. So any asset purchases made before 30th of June will qualify for an instant asset write-off as long as you satisfy all the conditions of that test.
There has been a reduction in the fuel excise levy of 50%. Now, what this means is the levy typically sits at approximately 44 cents in the dollar. This has been halved to 22 cents in the dollar. Now, where this will be relevant is if you're operating your business and you're either a heavy road user, so for example, running heavy machinery, trucks and the like, or operating an agricultural property like a farm, The fact that the levy has been reduced will also have a big impact on how much you can claim back as a fuel tax credit on your quarterly BAS. So just watch out for this. We'll make changes for the BASs that we prepare, but if you prepare your own BAS, you just need to make sure that you're using the current fuel tax credit rates going forward.
When considering tax planning, a large item that a lot of clients will focus on will be their superannuation. Important to note that in the 2022 financial year, the concessional contributions cap increased from $25,000 to $27,500 for the 2022 financial year. When tax planning, quite often it's time for clients to change the structure under which they operate. So a sole trader might convert to a family trust or to a company once they reach a certain scale, and there's certain tax outcomes that will be more beneficial in doing so. As part of our normal ongoing tax planning, this is something that we review with clients at this time of year and make sure that they're in the most tax effective structure possible.